Yes.
Good morning.
Good morning. This is Sherry at HomeSmart, and I have with me today my good friend and lending partner, Michael Ruhland at LoanDepot. How are
Good
you today,
morning.
Mike?
Good. How are you doing?
I'm doing well.
Good. Good to
So I
see you.
had a couple of questions. A lot
Yeah,
of
sure.
people are worried right now. It's kind of a scary time, and wondered what your thoughts are on interest rates, the financial markets, where our economy's heading.
Yeah, it's a scary time. I mean, no doubt. Things have been really all over the place. I'm glad to report, though, today that money is flowing. We are doing loans here. Some of the programs have been put on pause. These are the more outside the box, like bank statement programs, stated income investment programs. But your main bread and butter loans are still being done, and people need to know that they can still go out today and get a great mortgage. Interest rates are still very, very low, and everything is okay. Luckily, we're not talking about our 401ks here because obviously everybody's, concerned about what's going on in the markets. But as it relates to interest rates and mortgages, money is still flowing, and we are still doing loans.
Oh, that's great. So what changes are you seeing in our industry relating to the stay-at-home orders, and how is that changing how people buy homes?
Big changes. Obviously, people aren't, there's really no open houses. Most realtors are not showing houses because they're following the stay-at-home order. So a lot of this is going to video. How it relates to my side of the fence, if you will, if the lending side of the fence, what we are seeing are a huge increase in automated valuations. So a desktop appraisal, if you will. So they're cutting. Fannie and Freddie have really aggressively tried to cut down on the need to have actual physical appraisals, which is nice. They've also authorized a ton of drive-by appraisals, which again is really helpful. We are also seeing things like, look, we know a lot of people are out of work, and that's certainly scary, but a lot of those jobs have been put on pause, and we hope and anticipate a lot of them to come back. What Fannie and Freddie specifically has done, and FHA as well, is directed us to be more liberal with the verifications of employment. You still need to, have a job technically. However, they're being a lot more liberal in regards to these verifications and what their expectations are of us as a lender in order to verify that, to make the money continue to flow and to get people into their houses.
Well, that's great. So going forward, where do you see our industry in 6 months to say 2 years, and how are you helping your clients adapt?
Yeah, it's certainly big changes. A lot of videos. I'm reaching out to my clients, trying to reassure them that the sun will rise tomorrow. I can't even say that, but it will, and things are going to be okay. Look, I think inevitably you're going to have a somewhat of a downturn in the real estate market. I think we're naive to think that there wouldn't be one. But remember, oftentimes what comes with home prices dropping is interest rates rising. And they kind of have they have an inverse relationship oftentimes. And what you see is even though home values go down, thus making homes cheaper, money can get more expensive. So what I'm telling my clients is this: I wouldn't change situational buying if I was in the market to get a home. And here's what I mean, Sherry. I'm telling my clients, listen, if you've been shopping for a home and you have your money saved and you're for a down payment and you're ready to go and you find the right home, I would get that right home. Nobody has a crystal ball. Nobody knows what's going to happen exactly tomorrow, let alone 6 months or a year or two from now. So I encourage my clients to do what's best for them now. And for some of them, it may be to take a pause. And we understand that. Of course, you and I have spoken with that extensively. And we both support our clients regardless of whether they choose to buy a house or not. But if the situation is right, then the interest rates are fantastic. We have ways to facilitate the transactions, even through this craziness with gloves and masks and everything else. We're making it work. So if it's the right time for them, I would certainly encourage my clients to continue to move forward.
All right, great. Well, thank you for joining me today.
Yeah, well, thanks for having me. It's really good to see you. I know we're remote here, but I really appreciate the invitation. I hope we can do this again soon. I think that people want information and they want to hear from us, and we'll continue to send these messages. And of course, I want to encourage you and your customers, and anybody hearing this, if they have questions, to reach out to one of us, as we'll certainly get back to them with all the answers that we have.
Absolutely.
Cool. All right. Well, enjoy the rest of your
Right.
day. I really appreciate it. Thanks for having me.
You too. Thank you.